Hello, welcome to TFC Daily. This is an initiative by the team at Financial Coconut to keep you company during this tough times. Okay, hopefully it's the last 4 episodes for Stock Geekout because it seems like situation is better. We're gonna go back to maybe not phase 3 immediately, but we're gonna go back to a relatively normal life. So we will adjust and see if we want to still do this. But for every Monday and Tuesday, all the way to post 13th June, we will be doing this Stock Geekout live together with myself and Thomas. And this 8-episode series is sponsored by Moomoo, powered by Futu, which is an investment platform with a wide array of products from US stocks, Hong Kong stocks, ETF REITs, and what more, okay? Everything is coupled together with free US and SGX data, 24/7 financial news with the global investment community. Okay, today is the last day for the one free Apple share. If you have not gotten it, right, what are you waiting for? Huh? But that's beside the focus. They want to give you the best experience. And today in the house, we have a friend and a marketing whiz, Rakaesh. Woo! So yeah,
Hey
we're going to
guys.
talk about different companies, and Disney is a little bit more well known, but we have two other companies that are very big in the digital marketing space, Hubspot and Sprout Social. We're going to talk about all that, and maybe you want to start the day sharing with us, what is the outlook in the market, like how are you seeing the market, and what are you observing around?
Got it. Firstly, thanks, Reggie, Thomas, for having me. This is awesome. Yeah, so I think, the market-wise, currently, at least this last week, last week when we spoke about it, Reggie, it was quite weird given the crypto drop and Elon Musk saying a few things that that really led to the market moving up and down, and all of that, right? This week, found it still quite
Elon Musk
volatile,
is the
but it
new
was...
Elon Musk is a new Donald Trump. Like his Twitter
Right,
account
no.
is so big a following, he can shake things up. So that's crazy.
Yeah, but he's doing it even on a private level, which is awesome. Honestly, I don't think any of us would be disagreeing being Elon Musk right now. So, but I mean, I think this week the market picked up a little bit. There was a lot more in terms of the stocks. Crypto obviously is going down, but is that a causation? Is that a correlation to the stock market? I think that's very much a question mark on my end. I do see it being volatile over the next couple of months, especially when we lead to summer and more vaccinations are taking place. Because I think that the interest rates could be increasing by the US. Because if that's the case, right, do people put more money in the stock market? Do they borrow more? Do they start going outside, spending it on food, which they couldn't previously? These are all questions that I have and I wish I knew the answer to.
Yeah. So you're looking at the what did they call it? Reopen play? Is that kind of?
Oh, is that what they're calling it? Okay, is that what they're calling it? Yeah,
right, there's
definitely.
this thing like like a reopen of the economy. There's a play here, right? There's a strategy here. People are looking at like I think last week we were talking about kind of a cruise line, and then we have like Marriott's, all your hotels, your entertainments, your F&Bs, those are like reopen plays, and it's something in the market. It's people are being talked about. Yeah.
Oh, right. Yeah, I think that's definitely a question mark in my view, right? Whether it will reopen, that's another question. Given the cases, with India, with the US, if there's another variant, then the vaccinations could be close to nothing. It's really, really volatile, I feel. But I think it's one consideration for us to take into play.
Cool, nice.
So
nice.
so Rakesh, you have a background in digital marketing, right? So these kind of angles, right? What do you see inside the public stock market, right, that others don't?
Got it. I think I'll correct you there, Thomas. I worked for a marketing company.
Right.
So yes, I do have a background in marketing, but my training is actually in finance and economics in uni. But yes, when coming down to the marketing side of things, and maybe part of the reason why I invested in these companies, and even more so during the COVID period, is purely because of COVID, right? Of the situation at this point in time. The way that I see it, right, digital marketing, I really think is the new normal. Right? We've used that term multiple times over multiple years, even.
COVID 2021, just saying.
And people are getting sick and tired of this term, but you can really use it across anything that you would like to. And I think one of the new mediums that everyone is looking towards is digital marketing or social marketing. Even more so now. Now, previously, we could see a lot of these big companies going in and doing it, right? Obviously, your McDonald's, your Starbucks, all of that. But Giving power to the small retailers is that next big thing that COVID brought on, I feel, to the market. They are willing to spend more than their fair share to make sure that happens, right? And even reducing rent, all these offset that they get, all the other stuff that goes into their capex can be used towards funneling this to increase their base. And the best way to do that is on a screen, because nobody can leave their homes, right? Well, at least for the time being.
Yeah, I mean, look at what we're doing. We pulled this whole thing together, and we're having fun talking about things. But at the same time, it's a subset of marketing, right? So that's the future, and I think a lot of interesting stuff are gonna come out. So I think we have some friends here disturbing you. Someone said like he humble only lah. Actually, it's like very good at marketing also, of course, because you work with one of the big marketing firms, right? So as we before we go into talking about the companies that we're going to cover today as investment ideas, maybe you want to kind of run us through like, hey, what is your core ideologies? Like, what do you look out for in a company? And that would form the basis of like discussion as we go along.
Got it. Yeah, so I think, a couple of things that I look at, right? One of it is obviously the books, right? You just got to take a look at the numbers. Very basic amounts. I look at the revenue, I look at your expenditure, I look at the number of people you're hiring. And anything else that you have in plan, right? Because obviously earnings calls are public. You can listen to most of these audios online. They actually even have it in their investor pages on each of their websites. But a couple of things that I look at is forecasting. Right. And I think that's the way that we should be looking at it. The numbers only show historic. They don't show what's moving forward. So take into account the play, the economics, the market, and the current situation. Where do you see the potential? That's definitely one of the things that I look at. And I think that's why I was leaning towards this sort of marketing aspect, especially during the COVID period. The other thing that I look at is the team, right? The team leading it. Who are the C-suites, right? And what are they, right? What is their belief system? What's their motivation into starting this company? Is it really aligned with your mission, or was the mission just a gameplay, right? Or a marketing play, if you will? So I think this, for me, really, really matters, right? Because a good leader will empower their team members to do what they can instead of leading from the top. Because in that, I don't believe that's scalable at all. So you need to empower and you need to give that trust to the people in order for them to grow the company much more than you could as one person in 24 hours. So that's one thing. And I think last but not least, one of the things that I really look at is their careers page. So
really? You look at the careers page?
Yeah, I look at their careers page.
Tell me more.
Right?
Tell me more. Yes.
So I go into one of the last few things that I do is I go to their careers page and I see where they're hiring and how many spots they're hiring for and what these spots are. So for example, if you jump to Netflix right now in Asia, you will see a huge ton. I think you should see that for Disney as well. But you will see, a fair number in sales, in marketing, or is it more in ops? And based on that front, can you kind of guess where their forecast is, right? So that's really one of the hacks that I look at, and it seems to be working. So if you look at HubSpot right now, you go to their careers page, you can see that they seem to be hiring a lot in Australia, they seem to be hiring a lot in Europe, and we look at their numbers. Maybe it's not as good as the US. Of course, they keep on hiring in the US, right? But does that mean that Australia is a big market for them? Does it mean that Europe's a big market for them? Does it mean that Japan is a big market for them? Because you got to invest in order for you to make the money. So that's where I look at.
Wow, interesting. So this is like alternative data that you look at. Yeah, I think not many people actually bother.
Yeah. That's very interesting. And when you talk about forecast, right? So I think a lot of people talk about forecast really just from the level of like, oh, this is what we're predicting the company. Can they meet the forecast? Can they meet the guidelines essentially, right? But how do you actually really understand forecast, and how do you weave that into your investment ideologies?
That's a tough question. Let's see. I guess, I'm just trying to find the puzzle pieces, right? And whatever I can find in order to maybe make the word friends up there is really what I try and look for. That's a puzzle, by the way, just to let you know. So right? And one of the key things that I look at is one, right, is revenue, and two is expenditure. So, and I perceive and I see human capital as an asset, right? Most people do. Most people think that it's not. They should build systems and automate all of it in order for you to be scalable. Obviously, that's a different play, and some of these companies like Sprout Social and HubSpot and Disney and all their fans is all building these sort of systems in order for them to be quote unquote scalable. But at the very core of it, it's still human capital, right? And each human capital, $1 goes in, at least $2 must come out, right? That's just the basic of business, and I guess that's one of the things that I look at.
Nice, interesting. Is this like a tech kind of thing? Is this like a digital marketing kind of thing? Is this only valid for all the growth companies, the big guys that are trying to hustle down and do a lot of, because I think when we're trying to evaluate growth companies, everybody have their own unique way, right? When you talk about value stocks, it's very boring, right? It's always a standard, it's like look at these things, whether it work, the numbers, DCF backwards. Okay, it works, good price, you take. But when you're looking at growth plays, everybody has their own things that they're looking for. Glassdoor reviews, ad reviews, download numbers, hiring, blah blah blah. So is looking at forecasts, is looking at these kind of careers page really just more applicable for growth companies or companies trying to double down on a new venture?
Right. I think it depends. I think it's really got, the answer unfortunately is going to be it depends. If it's a new venture, then maybe you're in bad luck, or it's a risk reward, right? Because if that works, they're going to scale that quite a fair bit. If it's, is human capital, is the careers page the only thing that I look at? No, but it's definitely one of the factors that I look at. The other thing that I look at in terms of forecasting is what they say in their earnings call, right? For example, I think a couple of the stocks we were talking about today have revised their forecasted earnings for 2021. Now that might be a great
Disney
thing.
especially revised.
Yeah, Disney, and that might be a great thing if it's positive for now. But will that be positive next quarter when they may have to revise it back, right? So, I guess these are red flags, green flags. It really, really depends on when you look at them and what the timing is as well.
So I guess you held on to these companies for quite some time already. So you're really tracking their progress, and then basically looking at each of the filings, or whenever they give a presentation or something, you will know actually whether this makes sense or not. But if let's say you're coming in from the start, like right now, I just take a snapshot of say HubSpot, right? I have completely no idea what they did in the past. I think then that would be quite risky. Yeah.
Definitely. I think that's how I started off with Sprout Social. I was in HubSpot when I was looking at all of these things, and somehow Sprout Social. No, and
I mean,
Sprout Social
not speaking for HubSpot.
Yeah, I use the product.
Not speaking
yes,
for
yes.
HubSpot.
No, I'm not. No, but this is also only for entertainment purposes. I thought I'd just put it out there.
Yes. No recommendation for entertainment, educational purposes.
Yes. But I was quite in the dark with Sprout Social, right? So what I did there was really focus on the team, focus on the CEO. What's his aim, right? Have you listened to him speak, for example? Do you see his mentality? Do you see the way he sees Sprout Social, where he wants it to go? And because of YouTube, because of so many talk shows, so many interviews that these CEOs give, I try and find some sort of a personality there, right? Again, is this whole thing made up? Am I trying to bullshit all of us? I guess that's one of the methods that I look at, right? There's the numbers, and then there's a whole aspect of qualitative side of things that we cannot quantify. And how do we quantify it, or to a certain extent make a calculated risk that I'm going to buy this stock? Because the numbers can look great, but if the person is toxic, if the environment is not great, it's not going to give a scalable solution, I feel, in the longer run.
Yeah, fair. And I think this especially, difficult to understand because exactly like what you said, right? It's very hard to quantify. Understanding management, understanding team culture, and everybody has their own ways of looking at this. So great. Thanks for sharing. And yeah, I think based on that understanding of like how you look at companies, maybe let's go into the first company of the night, right? What do you wanna talk first? Like, is Disney our first thing we're gonna talk about, or what is it?
Sure. Why not? Yeah. Why do we talk about about Disney,
Yeah,
right? So
let's do
I'm looking.
Disney.
Awesome. Before I start, why don't you guys tell me a little bit? What do you guys know of Disney?
I mean, I watch Pixar, I watch like Marvel, I have not been to the theme parks, okay, other than the Hong Kong ones. Yeah, I mean, most people, they will know Disney as like a theme park business or like with movies and all, but actually their largest in the past was broadcasting, right? So ESPN, and Disney Channel, those actually was the biggest, like they were like the biggest in the cable space. But yeah, I think they're doing a pivot. They're doing a different play now with streaming and all. So they're cutting back their costs. They're not making money from movie licensing in that sense, right? So it's a different way of looking at things. Yeah, that's pretty much what I know about Disney.
Cool. Yeah, Thomas, what are your thoughts?
Amusement parks, big brands, challenger to Netflix. I think just these three things. Yeah.
Got it. Yeah, I think, on my side, that last thing that you guys spoke about, right, the pivoting or the challenger to Netflix is the part I'm really, really excited about Disney. I think they have their theme parks down pat. They obviously have deep pockets to make it work during this time. And it definitely affected their numbers. But I really see the Disney Plus play, especially here in Asia as well, to really take on, at least in the next year or so. I do believe they have seen an increase in uptake. I don't know if I have the numbers here, but let's see. Yes, so it was up 100 million from early March.
Subscribers or revenue?
Yeah. So, and the company reported 103.6 million Disney Plus subscribers at the end of Q2, up from over 100 million in early March, and 94 million as of Jan 2nd. So it went up 10 million in 5 months.
I just wanna put it out there that I remember when Disney first announced that they're gonna do Disney Plus, the numbers were somewhere around like 60 million in 5 years or something like that. So they were extremely conservative. That was when they first started, right? And the market sold them down. It was like, what are you doing? Right? Why not just continue to license your money? Why join this play? Right? But within the first year, boom, they exceeded their 5-month runway. And so now the market is priced them very differently. Right? We're seeing the premium as a streaming service, not so much just traditional content distributor, right? So I think that's something interesting that some people may not recognize, because if you don't follow Disney stock for many years, you will not know that this was the reality. When they first came out and Investor Day, the investors actually sold them down, right? Look at where they are. So it's very different. Yeah.
Yeah, completely right. And is this the whole play, right? The whole shift. Like when I liken this a little, maybe it's not shouldn't liken it, but when Amazon, right? Nobody heard of Amazon, 6, 7, 8, 9 years ago, at least in the in our space, in the personal space, right? Everyone hears of Amazon in terms of Amazon Web Services, and they always think they are a web company, right? They run servers, this and that. You go and get some space over there and you can set up your website, all this extra stuff. And then now everyone thinks Amazon, you think Prime, right? You think, is it the delivery service? Is it the e-commerce site? Is it the software? Because they just bought, the streaming service, because they just bought MGM Grand, by the way.
By the way,
right, so
James Bond is now with Amazon. Yeah.
Yes. So that whole thing, right? That whole pivot from this side to that side, and I really think that Disney is moving that way, mainly because as well, I think this COVID period also hastened it, right? I think Black Widow is coming to Disney Plus. I do believe another movie is coming to Disney Plus as well. I don't know if it's Black Panther 2 or not, but this is on top of that streaming that you're paying, right? So if you're paying, say, $16 a month, you have to pay an additional $20 to watch Black Widow, right? Because it's also not being shown in the cinema, it's being shown in your home and so on. And how many people are going to pay for that? Now, if you think about it, it is very expensive because if you go to the cinema, $10, $12 here in Singapore, it just makes sense. You get your popcorn, it's a whole experience. But $20, you have 3 people at home. Actually, it's cheaper for you to stay at home than it is for you to go to the cinema. So if that is that the way you're looking at it? Or number 2 is I don't care how many people is watching it. I like Black Widow. I like Marvel. I'm going to watch it and I'm going to pay $20 for it, right? And those are the 2 sort of thinking strategies that I see. For example, I'm going to pay $20 and watch it.
So are we smelling the end of AMC? Like no more cinemas out there. That's a different discussion. We can do that another time. But are you concerned about like Disney lowering their prices to acquire customers? Right. So I think when they first came out, the prices were a little bit higher, and then they bought over all the Fox content, Nat Geo, History Channel, and all those kind of stuff. And then they also acquired, I think, Fox's shares and Comcast of Hulu. Right. So they were consolidating a lot of these streaming platforms that were already out there, and then all these content players that were already out there, right? So they bought all these guys and then they reduced their price, while expanding their offering. Are you concerned about that? Like how would you look at that?
I look at it as concerning. Well, it depends on their pockets, which is why you can see, I think, also their financial, like their free cash flow has gone down, together with their revenue. Right? I think their revenue also went down a fair bit, but I think that's only phase 1. Right? I really think they still have deep pockets. Is it cause for concern for them to lower their cost, their price? No, I don't think so. I think it's cause for concern for Netflix. It could be cause for concern for the rest of their competitors, because they are acquiring customers. And that's what almost every company does, right? They lower the price. If you look at Grab, for example, or Uber, they lower your price so that you go and use them for X number of times, and then they raise the price again. Same thing they did with right? I mean, we can go on and on about how many people does this, like with Amazon, with anything.
So who do you see are the biggest competitors to Disney now that they've pivoted to this direction, right? Do you see Amazon Prime?
Before that, I think there is one real question that needs to be answered in this streaming war, okay? Do you see this as a one player take all kind of game? Or is this gonna be an oligopoly, multiple players, in this space?
I think that's a fair question. I was just going to answer that to Thomas. I was going to shoot him that question, actually.
Yeah. And then that question follows up, right? Because if you see it differently, then you will kind of, see whether Prime is a competition, right? So what are your thoughts?
Yeah.
Is this going to be a monopoly? One person takes all, or what's going to happen?
Why don't we do a quick poll here, right? Thomas, Reggie, do you guys have more than one streaming service that you're subscribed to?
I have Netflix. I don't have Disney Plus. Yeah.
Only Netflix? No Prime, no nothing.
No Prime. No.
Same for you, Thomas?
None for me. Yeah.
Oh, zero at all? Like
zero.
Absolutely zero.
Yeah,
Okay,
I am
so
at
you
the
don't
tail end
technically
of
count
that.
in this. Yeah, yeah, exactly.
They need
Got
more
it.
hard work to acquire you as a customer. Like,
Bring on those discounts, man.
Yeah.
Yeah,
What about
clearly,
you?
right? I have all 3.
Interesting.
Okay.
Interesting. So
Disney
we are at
Plus.
different parts of that curve, right?
Yes.
We've got the
Absolutely.
very, very extreme customer, and then we've got people in the middle, and then we've got people who just get all the possible services. Cool.
Right. So, and I think it depends. If you have a household, like, my wife and I, like, we like watching Netflix for its documentaries, for its great content that's coming through. And it's very different to Disney, right? Disney, in all fairness, is probably because of me, because I love Marvel. I love Star Wars, so I'm watching all I can find. Wouldn't call myself the best fan in the world, but I do love it. My cousin is probably the best fan in the world, to be fair. So I watch that, and I think it really, really depends, right? So if it's just you, would you focus on one? Maybe, but as a household, in one household, would you have multiple streaming services?
Fair.
I would say yes. And if that's the case, is it an oligopoly? Is it even market share that you can compare with each other? Because if they're doing it the same thing, you're not taking one thing across from another. You're effectively operating as complements, if you can even call it that. So I think that's the way that I see it, right? But in the form, if you look at that's the front end process, right? You look at the back end, downstream, it's your actors, it's your directors, it's your producers. These are finite. And I think that's where the war is going to be to a certain extent. That's where it's going to be, hey, Reggie, I'm going to sign you up for Netflix for 5 years. You cannot go to any other movie business or any other competitor in that sense. Thomas, I'm going to sign you up with Disney, and you're going to be with us for 10 years. You're going to do voiceovers for my cartoon animations that are going to come through. And you're going to be acting in some of these shows that we're going to show on Disney Plus, right? For example, I mean, so I think that's where the question comes in.
Right.
And I think when you look at Disney compared to the other guys in terms of the streaming service, I think let's just focus on streaming, right? Because Disney is like huge. If you want to talk about everything, it's gonna go crazy. So if we're just talking about streaming, Disney has the thickest capex and thickest opex, right? Because all these are in-house. They own the production company, they own everything. Whereas Netflix is running very traditional in the media space, where I have a budget, I give it to you, you produce, and then I'll stream through my medium, right? I think Amazon is doing that whole Disney thing, buying big production houses and all. Recently, we're seeing a little bit of that, but Disney is the one with the biggest ongoing production budget, right? And all these are in-house people. Do you think that is too heavy for them? Is it a problem, do you think?
It could be, or it could be not, depending on how fast they ramp up, right? On the demand side of things as well. Do they keep going with the content that they're doing? Do they then lay off, right? Because if anything, their infrastructure, which they can start laying off, but do they then say, okay, let's take a hit for this quarter, that quarter, this year, but then later on we'll be okay. We'll come out effectively like a spring, right? So we'll consolidate now during COVID time, and then as soon as it needs to be COVID ends, vaccine, come back to normal, we'll hit it like a spring and really spring forward. I guess those are questions only the CEO might know, together with a few other C-suites. But I guess that's certain things that I'm thinking about. I don't see it as a big issue, because if you're looking at that, then there are theme parks, there are all the other things are also massive on their balance sheet in terms of upkeep.
So what are the risks, or some of the risks that you foresee for Disney?
That's definitely one of it, like what we just spoke about, the cost, the capex side of things. 2 is content. If Netflix would have already taken some of these producers and so on, they're unable to produce that. 3, could they be just consolidating and just buying company after company, and they're buying it at an overvalued, over higher valuation than it's supposed to, and they just buy. So those are questions that I have. I don't know if there's an answer to that. I don't know, but yeah.
No, just want your perspective. Pretty cool.
Yeah, but I think those are all very, very real challenges that everyone in the streaming wars is facing, right? So limited content producers, limited budget. You want to get the best. Everybody wants to get the best, and I think in the US, it's already very matured as a market for streaming, and you're seeing cyclicality in streaming, right? HBO, whoa, Game of Thrones, right? I'll sign up for 2 months, and then after that, I'll stop it, and I'll go back to Netflix, and then 2 months later, Disney has some new thing, I'm gonna go back to. So you're seeing consumer cyclicality also in the US. So I think that's something that most consumers, most investors need to be aware of, because the US is essentially reflecting the most matured entity at this moment in time for streaming consumption. Like, how would consumers pay and manage their cost, in the streaming landscape, right? So it's something that you should know if you're an investor and you're looking at something like that going forward. Let's see how things goes, right? So I think there's still a lot of untouched market, and a lot of interesting stuff. But what about localization of content? Do you think it's an important part? Yeah, just last question about content.
Yeah, absolutely, right. How many of us watched Under One Roof and growing up, right? On Netflix. Thomas, not you, because you don't have Netflix. But as soon as it was on there, I was watching it, right, reliving my childhood days. I think localization is key, and Netflix is anchoring on that very, very quickly.
Yes.
At least that's the way that I see it, right? They're moving in quickly. They have the capital and the budget to do so, because they don't have the infrastructure. They're more agile. They can go directly into that country and say, hey, you create Money Heist, right?
Yeah.
get the budget, and go, hey, you know what? Let's try this in the UK. Oh, hey, look, it works. Let's try this in Germany. Let's try this in Singapore. Guess what? It works globally, right? So that's what Netflix has that I feel that's the edge over Disney. But localization is key. But as a caveat to that, there's a lot of influence coming from the States. There's a lot of Western influence, right? So localization is great, and it will keep us going in the form of monthly revenue streams and all that. But people want to watch the Black Widows. People want to watch the Avengers, the End Games, right? People want to watch the Friends Reunion, for example, right? Which are all still very, very much a Western influence.
Fair, yeah. So maybe localization is just a cherry on the cake. Let's see how it goes, okay, as things goes. But I do think that we have a lot of good pointers about how content works. What is the kind of operation in different big guys in this space, and Disney has very, very heavy capex to see whether they will continue to grow, to see whether they can anchor this business. Yeah, it's up to us to kind of take things as we go along, right? So let's move on to the next company, right? So I think we've covered a lot about Disney, but these two other companies are extremely interesting in the digital marketing space, and you come from that space, right? So let's start with HubSpot, right? Could I call it alma mater? But yes, it's not.
Sure.
no recommendations. They're not speaking on behalf of the company. But yeah, just share with us, what does HubSpot do? I think everybody has a little bit of idea, but sorry to say, HubSpot is in a space where I feel like they have tons of competitors. Like somehow everyone is doing similar stuff, right? So I want to hear from you, what is HubSpot? How do they work, and all this kind of stuff?
Yeah, for sure. So HubSpot, what are they, right? They're effectively a marketing solution, right? I think if I can look at their revenue drivers, they're through and through. They're one of the best marketing solutions out there. I feel, right, personally, mainly because not because I love them, right? But mainly because they seem to know what they're doing, right? They really practice what they preach. They focus a lot on the Google's algorithm, as far as I can see, because they focus on SEO. And if they focus on SEO, that's what Google has always been pushing on. And they call that effectively the king, right? Because that's when your bloggers come into place. All these extra stuff that has popped up, or extra jobs popped up because of Google. And HubSpot, I think, is one of them, right? So how do we operate in the Google space so that when you search for something, you get to be right at the top, not because you're paying for it, but because that many people are searching for you? That's what HubSpot provides, and they create a plan for you to do so. So it reaches out to
I think
someone.
the plane that just went past you came to my came through
Oh,
my
is it?
window. It's okay, so random. But yes, continue.
Yeah, so I think that's in essence that's what they look for, right? They look for organic marketing to reduce your cost and cost per click, if you will. So in marketing, just a quick rundown, is really all on cost per click, cost per lead, cost per conversion. And we obviously want all of that at zero, and zero is the best number, right? The lower, the better. Obviously, the marketing teams would speak with the C-suites and the finance teams to find out what the optimal amount is, so that they know what the customer acquisition cost will be, right? Which is the cost of acquiring a customer to use your service. In this case, maybe for Moomoo, it was Apple, right? So, or was it one Apple share, right? So that kind of makes sense.
Yeah, for Moomoo, yes, that's
Yep.
120,
What was that?
125. Yeah, I think $125, $150. Yeah.
Yep.
So that's
that
the
could be
cost.
their number. Could be their number, right? And same thing that you do on every single business that you have. And HubSpot tries to build, or it helps you build, an organic system that people will start searching for you, right? You can own a certain keyword you can try to own a certain keyword in Google based on the number of searches. Does that fit you? How do you build content around that word that you're using, or words that you'd like to use? And how do you develop great content so that people keep searching for you? That's effectively what they do, together with a whole ton of automation system, right? They believe that you don't need to build out a marketing team. You can use their system with 2 people and run the same thing. That's honestly what they believe in. But every competitor of theirs also say the same thing.
That's what every software company tells you,
Yes.
right? Just use us.
Yes.
Just use us. You can and your team, right? Just
Absolutely.
use us. But yes,
Right,
I think.
Yeah.
So what
go
makes
ahead.
Hubspot much better than the rest of the competitors? Like, it's a very product-centric company. So what way does it differentiate from the rest? Why would you pick HubSpot as a product?
So it again depends on the size of your company. All right. So HubSpot targets the small to medium enterprises. They have a range of prices from free right down to I think for 4,000 US a month. And in that comes product, right? So HubSpot is definitely a very product centric company. What they try and do here is to make sure that whatever is being heard from the users, they build it for them. And not to mention, you have to look at the team, right? One of the things that I look at is the team. And if you look at the founders, they're both actually well established before HubSpot even started, right? One of the founders, Brian Halligan, CEO, I think, was actually a VC, was in a VC, was working through all of that. And the CTO, who's also the co-founder, Dharmesh, actually runs a very successful blog, for a startup blog that is still running to today and was already famous before he even started HubSpot. Right? These two apparently met in MIT and then said, hey, let's do something. So they had so for example, Dharmesh, for example, had the skill of SEO even before it started, right? So he knew what to build, he knew how to build it, and he knew how to try and make advantage or take advantage of Google in that sense. They have softwares, right? Effectively, if you look at the different systems that they have, it's almost replicable across all the different competitors, right? From your workflows, from your keyword searches. If you look at it purely on a product to product perspective, it's very similar, right? So how is it different?
Yeah, and over the years, we're seeing like a lot of competitors ripping off different features of Hotspot. MailChimp, who else? Many of these guys, right? They're ripping off small little components of HubSpot and they're just kind of doing it on their own and optimizing it, focusing on that, right? So like, why HubSpot then? As an investor, why should I have confidence that this company is an interesting one that I should look at?
Yeah, I think the way that I try and look at it is that they're trying to enter the Asia market. And I think that's another risk reward situation here, right? We talk about Disney.
Always the Asian growth story. Always the Asian.
I guess I play in the area that I know, guys.
No. It's not. Yeah. It's just a lot of US companies that always tell me the Asian growth story, but when I look at their execution, they know nuts about Asia.
Yeah.
Okay, the way they do things here, they're just replicating whatever they did in the US. Yeah. Right. So
Yes.
the kind of ambassadors they use, the marketing structures, the lingo, the way they talk, everything, it's not good enough. But yeah, yes, continue. Yes.
I think if you probably look at it on a numbers perspective, HubSpot is expensive, right? Especially if you look at the Asian SMEs. So is there a way for them? And on the surface, it looks like it's very, very expensive right now. Is there some sort of a discount that they can give, this or that? That's another play. If you are a salesperson in HubSpot, the first thing you would do is liken it to CAC. If I can reduce that amount, you can pay me this amount, and I'll make you more money, right? Technically. But there's a lot of SMEs here in Asia, and this is where the big span of SMEs is. Now, is there maybe a localized product that they're going to develop? I don't know. Maybe not, right? Given that they're a SaaS play. But what else could be done so that they are localizing for Asia? Are they localizing? I'm not sure either, because most US companies don't. Most US companies do the plug and play method. It works in the US, it should work in the rest of the world. But is that the way that they're doing it? If so, how has the Asian market been over the last 1 year? If you look at their numbers, even in the US, even in Europe, is it growing? All right, and it is growing. And what is happening now that I see why HubSpot, or I've got invested into HubSpot for a bit, is because of COVID as well. If you look at its biggest competitor, and I think it would be not fair for us to not say this, but the biggest competitor is Salesforce, right? Everybody knows Salesforce. For those of you who don't, it's a massive CRM tool. They do everything from marketing to optimization to processes, all of it, right? And they operate in the enterprise space. Quick fact, actually, they were really cool. When they went public, their stock
Ticker was
the stock
CRM.
ticker is CRM. Exactly. The stock ticker is CRM, and that's so cool. So yeah, good on them. Good on them. So for me, it's that, right? Because even enterprises are scaling down. They're looking at rebudgeting. They're looking at consolidation, especially during this COVID space. If they are, and where else to look at, right? Is Salesforce one area that they're saying that, okay, we're not getting enough usage from our employees? Is there another software that we could use? Is HubSpot one of them, right? So I'm not even looking at it upwards, right? We're from your Zoho or your Freshdesk, looking up to HubSpot. That's only for effectively a growth company. But what about downwards, where these guys are spending 100, 200,000, USD a year, or whatever it is for you to try and build it. All right.
And I never saw it that way. In a sense of, I never saw HubSpot as like the McDonald's of marketing. You know, McDonald's
Right.
thrives during hard times, right? People downsize their spending, they go to McDonald's, and the numbers goes up, right? So I never saw it that way. But what made you think that this is how marketers are? Because you're a marketer, right? So I want to hear your view. Like, what made you think that marketers are actually considering this? Where they, I know HubSpot is the most expensive in their class, but one class above is Salesforce, and they are leaps more expensive than HubSpot and everyone else. Right. So what made you feel like companies are actually considering that downgrade? That's interesting. Yeah.
Yeah. So I think a couple of it, right? One is those that are going into that space and want to build something. In this volatile time, is it necessary to put out and fork out this amount of investment for you to build this entire system? Or should we do a plug and play, see how it goes? That's, I guess, one question that I have. Secondly, if you have that amount, but you're not having the usage, you're still paying maintenance fees. You're still paying system fees because you can't work directly with Salesforce. You work with the Salesforce partner. And every time you need to change something, you need to go to them. They're expensive. It's not straightforward. If you line up those costs coming clearly from a financial angle, is there a way for you to optimize all of that, right? A plug and play system that also, by the way, works with every other system that you need to, through Zapier's or through other API systems, right? Which obviously some of your internal systems can build, or even other companies that you want to develop, maybe even startups, right? That say, you know what, I'm not going to take the whole system. My product team can build A. I just need B to fit, and I've got C, right? What can I use for B, right? And this is where SaaS companies really come into play here, right? I don't need a marketing software, or maybe I already have a sales and a service software. I need something in marketing. Okay. Only marketing. What can we look at? I need more than just social media. I need workflows. I need sequences. I need automated emails. I need tracking of these systems. How does that work? And how will that plug into my sales system, which, by the way, I'm building? So that could be another angle.
Interesting. Are you concerned about HubSpot's limitation? In that sense of like, okay, we're talking about like a lot of these big companies coming down to use SaaS rather than enterprise softwares, right? But the reality is competition is very, very hard in this space. I can't name all of them, but I'm dead sure there are like tons of companies out there just taking different features and just kind of doing it. And you named a few like Freshdesk or Zendesk. Some of these guys, they're doing components of what HubSpot is doing, and Freshdesk is backed by Google, right? So Google's the largest investor, right? So then are you concerned about like all these guys coming in? They're taking different fragments, and will HubSpot actually be able to beat them?
Again, I think we need to look at time frame, right? Will they be able to beat them in the next year? Maybe not. 5 years? Maybe. We don't know what the world will hold in 5 years' time. But yeah, so I in my case, I look at it on a 6-month basis, 3 to 6 months basis, given the stocks. And I think that there is more probability that a Salesforce person might downgrade, or people might just plug and play their systems over the next 6 months, than number one, buying it out, or number two, you're not even in that bracket. If you're in the Zoho or Freshdesk bracket, that's really a startup, right? You have really close to nothing. You need to build that out. I think one key thing to note is, and I've used Zoho and Freshdesk, is their help desk post-sales service is not great. And for someone, just being honest, right? For someone that is don't know anything about marketing, don't know what to do, and you have all these systems, you have exactly the same systems in Zoho and Freshdesk as you do in HubSpot. What can you do tomorrow to build it all out if you don't know anything about marketing? So you are paying for the tools, but you're also paying for the service. And I think that's what HubSpot has over these other competitors, right? Freshdesk and your Zoho, for example.
Fair. But what about Zendesk? Random question.
Yeah, fair
because
enough.
Zendesk is a dominant player. They're the biggest guys in post, right? So post marketing, once the customer is in, your FAQ, your call center, your support system, email push, all those kind of stuff, they are dominant. They're big in this space. And they are trying to bite the front, right? They're trying to go earlier in the digital marketing chain of sales, email pushes, and all those kind of stuff. Are you concerned about them?
So Zendesk owns post sales, I really feel. Their service, their ticketing
one of those companies
systems.
that nobody talks about, right? It's not in a media circuit, but they own that whole system. Only guys in the tech space that runs apps or do digital marketing really understand this company, right? So hear your perspective, yes.
So I like I said, I think that's their bread and butter. That's their revenue driver. They're never going to run away from it. I love using Zendesk. I use Zendesk as well, and that's good, right? Obviously, they've done a lot of improvements on the last year, creating a CRM for themselves, trying to move towards marketing. But then comes my question, right? Search for anything in marketing and tell me what pops up first. And by the way, I'm not talking about ads. I'm talking about organic. Look at the amount of SEO searches that you get on anything marketing. For sure, you will hit some content that it has HubSpot on it. And that's just the power of their play, right? They've done this for X number of years. By the way, made over 1 billion in revenue. And then they, to a certain extent, the marketers can probably go home for a quarter and come back and nothing will break, right? Because the organic is just that strong. I think that's where it is at this point in time. Zendesk. So I do know Zendesk. I think, Zendesk syncs with HubSpot. HubSpot syncs with Zendesk. So I think they know where they play.
Most sales guys are syncing with each other. But okay, that's very, very good point. I think about like organic searchers and how they are really dominant in the SEO space, and anything you search randomly, you will be able to find something when it comes to marketing, right? So that's the power of organic searches. Yeah, so that's cool. Maybe HubSpot is the dominant guy that will continue to double down, and let's see where that goes. We'll see. Yes. So let's move on to the third company, which I'm very interested in. I've not looked at this company ever. I know that this is a super big problem because we are struggling, right? We have like a whole team of people, multiple interfaces, multiple social media accounts. Just trying to manage this whole thing is like, so it's problematic, right? So Sprout Social, they do digital marketing in the social media space, managing your content, right? So walk us through, what do they actually do?
Yeah, so I think a lot of people may not have heard about them.
I've not heard about them. but I know this is my problem. This is a big problem for me.
So this is very much niche, right? So we talked about marketing as a whole, but now we're focusing really much on just the social aspect of things. So they may not know Sprout Social, but you probably know Hootsuite. At least a lot of people do know Hootsuite, right? It's that owl company. They were really the first, the owl company. They were really the first, I feel, the first company to consolidate all of it, right? When we had Twitter, Facebook, I think even before Instagram started, I'm not sure. And social media started to pop up. Hootsuite was there to tell you, hey, do everything on one system. And then they gained great market share, so on and so forth. Then as most competitors do, or as most industry does, is if one person does really well, competitors start popping up, right? And I think Sprout Social is one of them. So Sprout Social is effectively a social platform, to a certain extent, a data aggregator. And they look at, hey, okay, this is great for you. This is the content for it. You can go ahead and do this number of views that you have done. You can post, right, using our systems as well. And I think, Reggie, and Thomas, like what you guys said, there's tons and tons of it, right, in our systems and competitors in this space. So why Sprout Social, right? And this, I guess, is more qualitative for me. So when you look at the numbers look good. It's going up. The numbers are going up. They're expanding. And they seem to be getting more and more people. The other side of it is the qualitative side of it, right? So before jumping into the qualitative side, on the quantitative side, if you look at their prices, they've actually undercut Hootsuite They're actually really cheap.
Like
And
how
this is
much
operating, and
difference?
that's a good question. I don't have the percentages, but they do undercut, and they
Do you know
give
their churn? Do
more.
you know their churn? I also want to know their churn. If you have
Ooh,
it.
I wish I knew inside info like this.
Okay, okay, go ahead.
I also want to know their churn,
Mm,
right?
mm, mm, mm.
And in all fairness, I've used them, and I don't find anything special. Like I said, the products are the same. The products are the same. So why them, right? So if I can just pull up some numbers before we jump in, right? So they've got they expect firstly a 30% overall growth. This is just looking at their financial outlook. They have also, I think, moved their numbers to 39.7 million. And they have had up 29% as opposed to last year, right? When we were looking at the revenue, 132 million already. But when you play with their systems, and you know, my colleagues and marketing friends tell me, hey, guess what? It's nothing special. Why did you invest in them? My answer is actually more on the teams. So if you look at their CEO, I really like the way that he conducts himself, the way that he speaks, what he aims at. He's, I think, voted the top Glassdoor CEO of 2020.
Really?
Yeah. He talks a
Glassdoor
lot on
is a
LinkedIn.
hard place to top, honestly.
Oh, really?
There's
Okay, that one I didn't know. But
It's a hard, but everyone, I mean, it's an open review platform. Everybody's talking about your boss, your colleague, your workplace. To be able to be voted as one of the top, that's a thing. It's interesting. Okay. Yeah, continue, please.
So yeah, he was voted that. I think he was in LinkedIn. He was in the top few as well when they were talking about CEOs. Whenever I follow him on LinkedIn, obviously, listen to everything he has to say. Seems to be always wanting to move forward. And if he's voted the top in Glassdoor, the way I looked at it was, so I didn't know they were very hard to be number one. By the way, I didn't know that at all. But it really shows what sort of company he wants to build. And Glassdoor is really all about that empowerment and really transparency and stuff like this, right? So if he's doing that, is he passing on empowerment, or is he empowering his team members to make these decisions? For whatever it may be, starting a new company, starting a new department, trying something out, seeing if that's working. If it's great, works, carry on, right? I think those are big things for me, and I focus really on that team to scale the company forward.
Interesting. Okay. I think this is an interesting company. I mean, not in the sense of like product, but the market cap is like what 3.7 billion. It's so small. It's very easy to double and triple, if they do well. But what are their growth plans? Like if you say that they're what do you call that? Like the product's not unique, and it's similar to everyone else. They're just coming in from a lower cost, lower price. So there's early acquisition, and we talk about LTV, which is pretty common in the SaaS business. Trying to see how much these customers can give you value, right? But what are their growth strategies and what are their plans going forward? Yeah.
I believe it's really that data play, right? It's that engagements that they can pull out of each of them, and giving back content, what's the word I'm looking for? Actionable insights to the marketing team to go, hey, this didn't quite work. This works. And you only can do that when you have enough data. You only can do that when you have enough information to actually make that statement. And how correct is it really matters, right? So I don't know if this is true, but I believe that's where they're going to, right?
Shout out to Survey Monkey. There's another company that's trying to do the same thing. Yeah. But anyway, continue.
Yeah, correct. And okay, every data company is doing that. But at the social space, and we just talked about how social is so important with Disney, with HubSpot, with the new normal, like we talked about right at the start of this. Is this the way to go, right? And I believe so. I strongly believe that this is the best way to work, because nobody knows how to navigate the social media space. The algorithms change like left, right, and center every other day. Google changes when it wants to. YouTube changes when it wants to. Facebook does as well, and Instagram. So how do we make that happen? And who can help me doing that in real time? At least that's the play that I see with Sprout Social.
Okay. But are you concerned about the price today based on revenue? I mean, I know the market cap is very small, but the revenue is very small, also 100 million. All right. So compared to everyone else that's in the SaaS space, And they're very rich, in terms of their price today. Right? Are you concerned about that? Is it something that you look at when you look at growth companies, or how do you factor those things?
Yeah. Fair. I think this is one of my riskier assets, or one of my riskier stocks,
It better
based on
be
purely
any
that.
riskier. I think you'll be in Elon Musk's books. But
Yeah. So what was it now? It's 60 something. I'm not
yeah, I
sure
think
how
about that.
much it cost.
3.7
60 something.
market cap, revenue 100 million. It's very high, very rich.
Correct. I
EV,
also do believe
EV,
they.
yeah, I think EV to sales will be like easily 30 over 40x.
Yeah. Let me just look at the price right now. So when you look at they do have free cash flow, so that's always good to note. Which means they have some money to invest in certain things if they would like to, or pivot or anything like that. They are currently at 69. I think 69 USD. I went in quite early, to be honest. I went in at $30.
Okay.
And I just saw it. I just saw the team, right? I didn't even have these figures that you could look at right now. I guess it's that trust that I put with the team. Again, looking at the careers page was one of them. But that's, yeah. So you're looking at EV 3040. That's really quite a lot. But is it inflated? Yes, I believe so. Is everything inflated right now? Yes, I also believe so. So should we be really looking at EV, right? So same thing with EPS. Like a lot of people say, hey, the EPS on this and this. I said, in my opinion, EPS can be manipulated with a simple share buyback. Like all of that can all be done. I don't look at it purely that. I try and look at alternative ways. Obviously, the books are the fundamentals are of course the number one that I go to.
Okay,
Does
cool.
that sort of help? What do you guys think?
I think it's fine. It's fine. Everybody has their own way to look at it. By the way, if I forgot to say, but if you guys have any questions about the companies, don't just listen to us talk. Hey, write in the comment section. Write in whatever you want to ask. Right? I think today we're very focused on the digital marketing space, and there are a lot of softwares in this space. You can randomly throw out some names. We can have this short little banter, or if you have any questions pertaining these companies, hey, don't be shy. Right? Just ask, and we'll share with you what we know, and we don't know. We can always come back to you another time. Yes.
Definitely, yeah. So I mean, Thomas, yeah, are you very much in the marketing space? What are your thoughts about?
No. More in e-commerce. But I have a background in software. These Sprout Social kind of like marketing automation platforms, I think it's very essential in any company, even for startups, for example. Like you can't waste your time to just do it one by one. After a certain point, right? You want to scale, so you kind of need the help of the software. But I think price point of the software for the license itself is quite important, because like the moment, let's say there's something that is cheaper, right? You just want to switch, because you want to stay lean. You want to make sure that you have also all the features that you need to do all your marketing and stuff like that. But I don't know. Sprout Social seems to be one of the market leaders, right? Whereas as you mentioned, Hootsuite is like just slowly declining. Yeah. So they must be doing something right. Yeah.
Yeah, but I think my take on these kind of companies, right, is they always sound good in the opening, right? Always sound good, like, oh, we have a superior product, we're getting traction, we're growing at 30%. How long can you grow at 30%? That's one thing. And the other thing is, at some point in time, you need to realize that these companies are B2B companies, right? So they work with businesses, they are not end-tier customers, and they need to be able to scale with these businesses. Right, which is why a lot of software companies, they fumble, because at some point in time there is a switch. It's like at some point in time I need to go bigger. I need to take Salesforce. At some point in time I need to jump, and these jumps are not small jumps, right? These are like the biggest of their revenue generators. They switch to a big enterprise software. That's a very, very big bleed to these kind of software companies. So whether can they scale with the guys that they're working with, whether or not it's sticky, what is their churn rate, all those matters a lot in the SaaS business. And I don't know enough about these companies, so we'll need to see how things goes. Okay, so yeah, I think we have come to the hour. If you guys have no questions, we're gonna take a break, and we're gonna take a break for today, right? So last few minutes, if you have any questions, drop them in the comment section. We'll try to answer you, to the best of our abilities. If not, I think it's been fun. It's been great. Thanks for coming on the show today. Sharing with us from your digital marketing standpoint or how you look at certain things, right? It's always great to have people that are in the space to share about their space rather than just investors, just analyzing numbers. Because at certain point, you need to know that, hey, people that are practitioners, they do have superior understanding of the space, right? So is there any other last things you want to add about the digital marketing space that, retail investors like us should understand or should look out for, should be aware of?
No, I think I said quite a bit, but I think as a quick summation,
I just want to squeeze last few things out of you.
Squeeze
Yes.
it all. I mean, look. I would say, right, as a quick summary, look at where you think the world is going to be next year, 2 years from now, and if you feel that we're going to be looking at our phones more or laptops more, then maybe this is one area that you definitely need to take a look at.
Great. Okay, so thank you for spending time with us. Stay tuned tomorrow for more good content. If you want to hang out with us, join our Telegram group, okay? And also become a member to receive early releases, premium investment content. We do a lot of geeking out about different companies, closed-door discussions, and community. And just go to thefinancialcoconut.com to sign up to be a member today. And of course, thanks to Moomoo, this is happening. And I want you to go ahead and download the Moomoo app to open your Futu SG trading account. I think they have a lot of interesting features inside. I was playing around with it, all these community functions so that you can learn new things and stay connected, because investing sometimes is a little bit lonely lah. Huh? It's always like you gotta do everything on your own. It gets a little bit boring. So while I am super big on being fundamental, being prudent about your investments, I do think having an investment community is extremely powerful. So head over to the Moomoo app and enjoy yourself. Keep learning. Join us tomorrow. Thank you guys. Thank you for your time. Woo!